reverse there. Yikes. Elon Musk warns users against latest deepfake crypto scam. Tesla CEO Elon Musk clarified that he is not associated with the recent fabricated video that promotes a cryptocurrency scam. The video in question is a deepfake of Elon Musk promoting a cryptocurrency platform that supposedly offers 30% returns on crypto deposits. The footage used was taken from a TED Talk that Musk gave in Vancouver in April of this year. Scammers have been using this video to try and trick people into investing in their fraudulent scheme. The video and tweet were noticed by Musk himself, who has been active recently since his move to acquire the social media platform for an estimated $44 billion. The Tesla CEO and SpaceX founder replied to the video in his funny style. Musk's global reputation as a technology pioneer has made him a target for scammers looking to take advantage of unsuspecting social media users and investors. Users who are not so tech savvy are at risk of being duped by scams that promote unrealistic returns on investment. Earlier this year, the FTC released a report which estimated that over $80 million worth of cryptocurrency was stolen from unsuspecting victims in just a 6-month period. Even though this type of scam is not new, it seems to be growing in popularity, with more and more people falling victim to it. When Elon Musk came on Saturday Night Live, fraudsters saw an opportunity to take advantage of his well-known support for Dogecoin. They created fake live streams purporting to be Musk himself, promising to give away free crypto. These scams duped people out of about 9.7 million Dogecoin, worth around $5 million at the time. The FTC has been investigating these fraudsters and their addresses. Deepfake videos have been around since 2017 when the term was coined. Using artificial intelligence and computer-generated images, videos, and audio, creators can manipulate, deceive, or scam viewers with content that is often so realistic it's hard to tell what's real and what's not. Blockchain technology has been eyed as a possible solution to deepfake and fake news. However, social media platforms are still rife with fraudulent media. Always make sure you're looking into everything that you're getting into. Up next, Portugal's Assembleia da República says no to 2 new crypto tax bills. The Portuguese Congress, Assembleia da República, has rejected 2 bills that would have imposed a tax on cryptocurrencies. Portugal is considered a cryptocurrency tax haven with no taxes on crypto trading since 2018. This has drawn crypto startups and events to Lisbon, even though businesses that accept Bitcoin have to pay income tax on it. The Portuguese Minister of Finance, Fernando Medina, recently declared that cryptocurrencies in the country will soon be subject to capital gains taxes. However, 2 separate bills from minor political parties to tax crypto assets were rejected by the Portuguese Assembleia da República. Derek Isaac Kaplan, founder of Duoverse and V Mining, welcomed the news, saying that any unreasonable taxation would have been negative for the cryptocurrency sector's growth. He told Cointelegraph that a regulatory framework is important, but that the crypto industry needs the space to grow. He said that the crypto industry is nascent and shouldn't be subject to the same rate as capital gains on equivalent income because it would be unfair. This development reflects that crypto-friendly sentiment goes strong in Portugal. According to Eco, a left-wing economic newspaper, the proposals to tax crypto profits in excess of 5,000 euros were rejected by the government during a budget voting session on Wednesday afternoon. In Portugal, crypto transactions are not taxed differently than any other type of transaction. In comparison, the current capital gains tax rate for financial investment is 28%. The country's Deputy Finance and Tax Minister, Antonio Mendes, stated during the same session of Parliament that taxing cryptocurrency is a complex reality and capital gains may not be enough. In February, an immigrant to Portugal raised the nation's crypto adoption rate among merchants and even predicted that Bitcoin might one day become legal money there. However, government officials are now mulling over how to tax digital assets, which may be a cause for concern for the individual. Up next here, Swift probably won't exist in 5 years, says MasterCard CEO. On Tuesday, MasterCard CEO Michael Maibeck said that he doesn't expect Swift, a platform used for cross-border fiat transactions, to exist in 5 years. Maibeck was discussing central bank digital currencies at a panel session as part of the Global Blockchain Business Council's Blockchain Central Davos conference. Maibeck caused the audience to gasp in shock after answering no to the moderator question of whether Swift would still exist in 5 years' time, according to Cointelegraph reporter who attended the session. It was unexpected that he would give a negative response, given his position at MasterCard. The panelists before him, including John Frost, a senior economist at Bank of International Settlements, and Jennifer Lasseter, executive director of the Digital Dollar Project, had both answered in the affirmative when asked if they thought a United States CBDC was a good idea. Following me back, other panelists also took the affirmative viewpoint, including Yuval Rus, CEO of Digital Asset, a data technology company, and David Treat, director at Accenture and co-lead of the company's blockchain business. When approached by Cointelegraph immediately following the panel discussion, Meebach declined to comment further on the subject. Last year, Swift processed 42 million messages per day, but transactions on the network can take several days to complete. The company has been striving to maintain its relevance in the international economic order, especially in regard to CBDCs. Swift announced on May 19, 2022, that it is collaborating with French IT company Capgemini, to explore the linking of domestic CBDCs to facilitate seamless cross-border payments. This is the second round of experiments Swift is conducting involving CBDCs. Cointelegraph reporters observed that during a panel discussion titled Rules of the Road for the Digital Economy, Meebach spoke about how regulation can help reduce the amount of unnecessary hype around a new technology like cryptocurrency. Meebach said that not everyone is demanding regulation, but it would help to cut down on the noise in the crypto world. By engaging with regulators and being principled, he is optimistic that they can make progress. So if you're utilizing that platform, something to note. What do you guys think? Will it be around? Up next here, exchanges back Terra 2.0 revival plan via airdrops, listing, buyback, and burning. The fall of Terra Luna was a shock to the crypto market, but the project is not staying down. It has secured backing from crypto exchanges to help it rebuild. Terra will be airdropping its new native tokens on May 27, 2022. Eligible holders of Terra Luna Classic, Terra USD Classic, and Anchor Protocol UST will receive the new tokens. Binance and FTX have both announced that they are working with Terra team in order to help those impacted by the upcoming airdrop. Binance has stated that their goal is to assist the Terra team in their recovery plan and help any affected users on their platform. FTX announced that it will support the airdrop and temporarily halt Luna and UST markets during the migration. The Terra team said that they are also working closely with more partner exchanges that will support the airdrop. In addition to the airdrop, many exchanges like KuCoin also expressed support for Terra 2.0 by supporting the migration, listing, and trading of the new Terra tokens within their crypto exchange platforms. At the moment, there are no plans to list the new Terra tokens on BitMEX. This is according to a statement from a spokesperson from the crypto exchange. While some exchanges have expressed their support for the new tokens, not all are eager to list them. They said that they don't have plans to list Luna for spot trading right now because they don't have a custody solution for that particular token. The spokesperson said that the exchange needs to ensure there is a reliable reference index before it can consider contracts on the new Luna token. Meanwhile, some users are not ready to fully move on to the new chain. Although Terra founder Do Kwon is against burning Luna's circulating supply, users of the crypto trading platform MEXC Global voted to initiate buybacks and burning in Terra's secondary market. Using the trading fees collected from the new Luna USDT spot trading pair within its platform, MEXC committed to a month-long buyback and burning process. So hopefully that will be helpful for anyone who was affected by that fall. Up next here, former Binance executives launch $100 million venture fund. Old Fashioned Research, OFR, a multi-strategy blockchain investment fund, has completed its first close. The fund, which is led by several former executives from Binance, invested in over 50 blockchain projects in its first year. Old Fashioned Research has been operating in stealth mode since its foundation in late 2021. In that time, OFR has invested in more than 50 companies in different markets, like Woo Network, Genopets, Metaverse Magna, MetaDerby, and Zeta Chain. OFR is now coming out of stealth mode, according to an announcement. OFR was founded by Ling Zhang, who previously served as VP of Mergers and Acquisitions and Investments at Binance, and Wayne Fu, former head of corporate development at Binance. Jing Zin JX, who led Binance Labs and Launchpad's major investment deals, is leading OFR's venture arm. OFR was able to raise funds from a number of major limited partners, both from inside and outside of the crypto industry. The lead investor was WeMix, a gaming platform that is backed by the listed leading gaming company WeMade. Other notable backers including the family office of Gang Wang, Jiu Capital, who was the founding investor at Didi, and the crypto wallet SafePal. On May 25th, venture capital firm Andreessen Horowitz announced that it had closed its fourth cryptocurrency fund at $4.5 billion. This is less than a year after the firm announced the launch of its $2.2 billion crypto fund 3. So, some exciting news. And last but not least here, ECB president's anti-crypto comments trigger community responses. The crypto community has responded to European Central Bank ECB President Christine Lagarde's recent anti-crypto remarks. People have expressed disappointment and even criticized the euro. Lagarde reminded the world of her stance on cryptocurrencies, saying that they are worth nothing because they are based on nothing. She expressed concerns for those who invest in cryptocurrencies and called for regulation. The crypto community responded to these comments with their own thoughts. Sheila Warren, CEO of the Crypto Council for Innovation, said she was disappointed but not surprised to hear them. Warren believes the new digital economy will run on a combination of digital currencies, including crypto, stablecoins, and CBDCs. The crypto community responded to these comments with their own thoughts. Sheila Warren, CEO of the Crypto Council for Innovation, said she was disappointed but not surprised to hear them. Again, this is what she believes that they will be run on: digital currencies, crypto, stablecoins, and CBDCs. Crypto analyst Lark Davis took the opportunity to react to Lagarde's remarks. He quoted the ECB president, tweeting that instead of describing crypto, she had just described the euro. He claimed that the euro is printed out of thin air. By sharing a video of Lagarde admitting her son trades cryptocurrencies, Byzantine General called her a dinosaur. In a tweet, they said, "How do these dinosaurs not realize it's over for them? Why keep fighting the future until your last breath?" Earlier this year, the European Commission announced that it was preparing a digital euro proposal for 2023. The ECB is expected to have a prototype by the end of 2023, and if everything goes well, it may be issued in 2025. In April, ECB executive Fabio Panetta gave some details on the central bank's research into CBDCs. He said that CBDCs may be necessary to keep up with the competition, but that they should not become a financial disruption. So yeah, that is a good comment. Like our money, I mean, while some I guess are backed by things, backed by gold or whatever, like it's really, the value of it is depending on what people are going to spend for it. So like the rates fluctuate, pricing fluctuates, like, oh, this is worth this now. Like the price of things, this is worth this now because the people are willing to spend on that. So that's similar to crypto. But that's all we have for you today. Thank you so much for watching. I hope you all have a great Memorial Day if you celebrate that. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.